All right. So today we're going to talk some more personal finance stuff. We're going to talk about cash savings kind of things. But before we get on it, I mean, personal finance this week, what I consider personal finance and investing, it's kind of dominated the news. And for some of you may be really into this stuff and may be completely inundated with all this information. For some of you, you may not quite understand it enough to kind of make heads or tails of it. So I'm going to jump ahead just a little bit. I'm going to give just a real quick explanation of short selling. If you understand the concept of short selling, then you kind of understand the rest of it and the dynamics that are going on. And it actually makes it pretty interesting. So my apologies if you already understand how short selling works, but I'm just going to give you a quick example because sometimes it's kind of hard to get your head around, and especially with most of the journalists, obviously, unless they're from that field, they don't understand what they're talking about. So the dynamic in short selling is well, in the stock market in general, you always need a market. You know, these people may be looked upon as vultures or whatever, but they do perform a function when a company's in distress. I mean, it could go straight into bankruptcy, and arguably sometimes these guys push it into bankruptcy. But also there is important to have somebody out there who's willing to purchase things that are basically distressed. So let's just look at an example, and let's just remove it from stocks because short selling could be used in a number of things. Let's say in this case, let's say you're a mechanic and you are just a run of the mill mechanic, but you're working on, let's say, a Toyota Prius, and you realize that there's a problem, that the Prius is of whatever year group, there's some issue with the battery or something like that. It's going to be, just the car's going to be semi worthless here in, 4 to 6 months once people figure out how screwed up this battery issue is. And it's not really known in the market. The used car market, people are still selling for normal prices. Well, so you as a mechanic, you want to know, how can I benefit from this? I did some research, I gained some knowledge, and I know some information that gives me a bit of power. So, if you're a sharp guy and not unscrupulous, but whatever, don't mind taking advantage of the situation, you could go to, say, a dealer, and a dealer's got 12 or 14 of these Priuses on the lot. You say, what I want to do is I want to borrow these Priuses. I'm going to sell them, but don't worry, I'm going to replace them with very similar Priuses, exact duplicates almost, same mileage and everything else, but not the same ones. Anyway, in the interim, I'm going to pay you interest. Did I misspell interest on it? Oh, well, I'll fix that later. So anyway, the dealer is, well, I get the cars back and you're going to pay me a fee in the interim. Why not? So let's say this guy gets all these cars, these 14 cars, and he sells them all for 8 grand. Um, he sells them for what is arguably a high price given the known defect that he has. Now, once he's sold them, he's going to drive the price down. And in a public sense, he could go and say, "Hey, guess what? All these Priuses are junk. They've got a problem. There's a battery issue. And in the real world, the guy'd go on TV, do whatever, because he's got an interest in that price going down. And so let's say, this becomes a known defect. Nobody wants these cars. And so he's able to buy them back. He goes to all these people and say, I know these cars are not great, but I want to buy them. And he buys, these 14 identical Priuses, and he only pays 3 grand for them though, because they're not worth as much. And he gives them back to the dealership. And he's like, okay, I took 14 cars from you. I paid you some interest. Here's your cars back. And bada bing, he bought them or sold them for 8, and he only paid 3,000. I mean, he made 5 grand per car. And then what's he do? He moves on, as a mechanic, and because that worked quite well for him. I mean, made 5 grand per car, a lot more than he makes working on cars. That's his new gig is finding, problems like that and just rinse and repeat over and over again. And so there's people who do that. The hedge funds make money in a number of different ways, But one way is definitely short selling, looking for distressed companies that realistically, in their mind are overvalued, have some sort of issue with them, and just beat them down. And do they care that they may crush the companies? People go out of work, whatever. A lot of times it's just a failing company anyway, and they gave it a little push there at the end. But anyway, they do perform a function. So this is a pretty good gig, but what could go wrong? Well, we saw that with the whole GameStop situation. In this case, maybe the product isn't that bad. I mean, GameStop, a retail game sales like a blockbuster model, you would think that's going to fail, but things can change. And I'm not saying it necessarily has. I'm not sure. I'm not making any guesses whether GameStop will be around in a year. But there are some new gamer consoles coming out, and I'm not a gamer. But anyway, and then also they got a new CEO who, was in the mail order, not mail order, but the online space or whatever. He was with Chewy's. They sell pet stuff, and got to be pretty big and got bought out, and so now he's taken a place with GameStop. So maybe the problem, the company wasn't really that bad. But the bigger issue here is because of the amount of information available, and frankly, a lot of these people, maybe due to COVID, a lot of folks with time on their hands, and also, like I said, short sellers are not necessarily popular. So people trying to, put one to the organized short sellers and, get one for the little guys. They did some analysis and they found out that maybe in this case, like I said, I can't remember the number of Prius I said he bought from the dealer, but let's say he had 10 Priuses and he said, you know what, I'm making a lot of money. This company's going to go out of business. Why don't I just go ahead and sell, 14 Priuses, even though I don't have them? Or in the case of GameStop, what happens is there's stocks out there that are available for purchase. They call them in the float. Whereas some stocks can't really be sold. For example, when the new CEO comes in GameStop, he was given, an equity share. He was given a bunch of stock. Well, because of the Securities Exchange Commission and a bunch of other things, he can't sell those stocks, or he has to notify and go through all this. Anyway, they're basically not available. So people got wind of the fact that maybe this company wasn't that bad. Maybe the product wasn't effective. And then also they figured out that these guys who did the short selling, they got a real problem because they need to buy these, Priuses, like I said, for $3,000 or whatever their low target price was to make money. But all of a sudden, if people go, no, we don't want to sell, and we think these things are actually all right, or we're just pissed and we're gonna hold on to them because we know you're paying rent, you're paying interest on that money, and you've got a commitment for when you need to return those items, those Priuses or those GameStop shares, and we're going to make this as painful as possible, and we're going to run the price up, and you guys need to close out your short positions. You need to replace those shares, and that's what's happening now. But there's so much rhetoric out there. They're talking about 52 billion or whatever billions were lost here. Billions weren't lost. Billions were transferred. It's a zero sum game. For every winner, there's a loser. So if some hedge fund lost whatever billion on a day, some guys out there, perhaps on the Wall Street Bet site, some of those members made the money back. So it's a good thing. Where wealth is actually destroyed is when the company goes out of business. But if the company is still viable and money is changing hands, that's a transfer of wealth. That's not a loss of wealth. So anyway, it's interesting stuff, and it's also done a lot of things too for some of these brokerages. I've got a couple different brokerages. I wanted to buy some. I didn't want to buy GameStop because it was already too overpriced. But when they suspended trading, that was not fair. Anyway, it depressed the price on a lot of stocks, to include AMC, and that's where I rolled in and bought a few through a different brokerage. Again, is this investing? No, this is speculation. So don't do this with your primary money. You should save your 10% per month for yourself. But if you happen to have some extra, and again, I'm not giving investment advice, especially on this stuff, but that is the kind of money you would use. This is, the amount of money where it's going to be, I whatever, I'm going to go, blow it on something stupid, or maybe I'll speculate with it because you're kind of blowing it on something stupid if you're speculating because odds are you may lose. But in full disclosure, I did buy some of this stuff, so I'm not that bad. Yeah, Reddit is where that Wall Street Bets site exists, and like I say, the other day I bought I'm got 225 shares of what do you call it, AMC. Again, AMC is the cinema. They're not doing well. Tons of debt, but are they as bad as they say? For a company like GameStop, they may not be that great a company, but you talk about, name recognition, especially within the key demographic that might be buying the games. Um, they're probably in a pretty good position to take advantage of, even the online downloads or something if they can switch to a different model. So anyway, it's interesting. We'll talk more about stocks and stuff like that and some of these investments. But yeah, some of these things can get really hairy, but there are some safe ways to do it, safer. I mean, in this case, this was just direct purchase, so I'm not leveraged. This isn't borrowed money, so that's reasonable. But if you start doing these contracts like the hedge fund guys do, your risk is goes to infinity. Um, a smarter way, if you wanted to, gamble like that, would have been to do an option, which is a right but not a responsibility. So if things get too hairy where you're not making money, you just lose your investment. On these guys, if the price goes screaming up like it has, their losses can go to infinity. So anyway, enough of that. A couple other things. We were talking about the stocks, and I realized I was kind of pushing through it, or not stocks, but taxes last week. This again is just some slide examples that I put together from previous. So this is older stuff, but the numbers are still, this is the W-2 amount, so 100 grand, and you can pump in the numbers as you want. In this case, I use 18,000 and 3,000, and boom. When I'm paying in this case 1,071 in taxes because I've got these deductible items, right? Tax deductible mortgage interest, tax deductible real estate taxes. If I'm a renter and I take those details out, these things go to zero and my tax goes up by whatever, 3,700 bucks roughly. Other things, 1098 is where you find those things. So there's all sorts of different forms that you'll get used to, but the 1098 is, the form that they're asking for in this case, and that has to do with mortgage interest deductions. And they'll also normally have your real estate taxes listed on there as well. That's the form that's used. Some more examples. Student info. So here's somebody paying student loan because yeah, student loans, the interest is tax deductible. So here's $1,000. You're expecting this number to change. Uh-oh, you made too much money. So if you would have done the 401k, if you would have, got your adjusted gross income below 80,000, this number would have changed to the good. So again, you got to sort of know where these absolute limits are, and that's what you might need to do. That again, this could drive how much you're going to deduct from your 401k to get you under that limit so that this number drops. You got to do that during that tax year, right? You can't make deductions out of your 2020 taxes now that we're into 2021. So again, don't wait to look at your taxes till the April 15th or thereabouts, or your options are limited. You could have fixed this situation. Um, Donations, we talked about that. Here again, person's not donating anything. And here he donates 1,000. And so again, the numbers will change. And remember, you can figure out what tax bracket that person is in based upon how much that tax declined. It went from whatever 744, and now he's getting a refund. She, whoever, is up to 7. There you go. Casualties and thefts. This is what I was talking about, where the federal designation is, sometimes there's wildfires. Anyway, these things, more than just news headlines, they do make a difference if you're involved. But, it's named storms, and anyway, claims of 10%. So again, that's a lot of stuff getting damaged. So if you're making, whatever your adjusted gross income, say, is 80 grand, you need over $8,000 worth of damage, and then you can start counting it. All right. So banking and interest rates. Banks, they have different functions. There's the big banks that operate in the commercial level, and there's like the retail banks that we're used to dealing with. Um, these terms kind of change around a little bit, but when they're, in this case, when they're saying commercial banks, they're talking about ones at the retail level. There are banks that exist up at the higher levels that do, big currency exchanges and are involved with markets and things like that. But that's not what we're talking about here. And especially since we're talking about accounts up to $250,000 per. So this is, finance terms. This is small potatoes for commercial stuff. Another thing, this book kind of gets wrapped around. They're kind of haven't really updated things, where there's been so much banking deregulation that it's really blurred things between what a credit union versus a regular bank could do versus, let's say you're in town and you bank with, Alaska USA versus, Wells Fargo. Well, Wells Fargo's a bank, and, Alaska USA is a credit union, but does it make a big difference? It used to, but now they pretty much identical services. To them, they might take offense to that. They'd say, "Oh, no, you're a shareholder with us," and the other person would. Anyway, it's kind of silly. What you need to be concentrated on is paying the lowest fees for the services that are important to you. The rest of it is no big deal. You may even find that you don't need a local bank, that you can do things online and be just fine. You'll see a lot of military people do that. My bank for years was, well, still primary bank is still in Texas, a military bank there, and that's just because their fees are easier and they're used to doing stuff online. They've always had a better online presence than the local stuff because they had to, and they've got the ability to waive fees. For example, if I go to any ATM, they pay the fee, so I don't have to be, seeking around to find the ATM that's in network if I want to pull back some money, and worried about how much of a fee they're going to charge me at the end of the month. I don't do many ATM withdrawals, but one or two, I mean, I get whatever, 4, 6, whatever bucks back for the month, because, and then they don't have to provide ATMs either, so they save a little bit of money. So savings institutions, thrift institutions, we're not going to get too wrapped around about it. um, Again, they're these true entities like this. There's just not that much value in making distinctions because the distinctions have kind of gone away. Um, yeah, personal loans, finance companies. Sometimes these guys are just almost to the point of, well, they are to the point of being predatory, where the interest rates are so high that, if you're utilizing these folks on a regular basis, there's been some issues before, and you need to, this is like having a high credit card debt where you just need to get that thing paid off and get your finances in order. Now, security firms, this is more banking, and I'm sorry, some banking, but mainly for investments and mainly for brokerage type things. So, um, but again, I can write checks off brokerage accounts and do things like that, but I don't. What I like to have kind of a divide personally, where I have a bank that I use for all of the transactions, and I also have to have a local bank because some of the business I do deals in a lot of cash, and there's still not an easy way to do that with online banking. But then I have any real money, and that would be money above whatever. Certainly, anything above 10,000 bucks would not be kept in a local bank because you want that divide where, for one thing, just the identity theft and the rest of it. If if you have a checking account with, you know, 50, 60 transactions and you have some sort of fraud going on, and you've got a lot of money in that account, that money in my mind is at risk. Whereas if it's in a brokerage account with probably no transactions or just incoming transactions, it's very easy to detect things. And, hassle type things like two-party authentication to get money out of it um, is not a hassle if you're not, taking money out of it. But, every once in a while you can deal with that and put up with it. But on a regular checking account, obviously that would be, just cumbersome. Insurance companies, yeah, insurance companies have a special role, but they're best to be kept in that special role. If you start using them for investments and other things, again, this is opinion based, but compare the fees and compare the performance. Insurance companies tend not to, have the performance that true investment companies do, and they tend to be very agent driven, and agents obviously, like anybody else, they want to be paid for personal service, so commissions are going to be high and the rest of it. um and then investment companies. So this is, they finally get down here to the bottom, financial conglomerates, and this is more the norm than the other. Most of us with, say, if you got Alaska Airlines card, you're dealing with Bank of America, like it or not. And but I would not bank with them, and I would not, I'm sure they have brokerage services, but again, you become more particular in what you expect out of a company. I was just dealing with a company trying to reset a password, and after a half an hour I gave up on the phone. I mean, that kind of customer service, especially in fast moving markets, is that's just unacceptable. So, bank subsidiaries, again, these things are getting blurred. Um, there's a lot of conglomerates that do it all. Here they're showing the subsidiaries, but yeah, you could also find individual banks. But anyway, um, it really, the homework assignment for this week is going to examine banks. I'm not trying to get you to switch banks or anything like that, but you should, choose your bank for a particular reason, being that it's the most convenient and, is charging you the lowest fees. And not because that is just how I've always been with it. I'm kind of lazy. I mean, there is some value to having some longevity with a company, but if you're constantly getting burned and nickel and dime on stupid fees and extraneous charges, you need to move on or just reassess. You may figure out that you've got the best deal, but then again, you may figure out that um, you may need to go to a different one. So checking accounts. I had a foreign student or two, and they're always perplexed by why we even do checks. That's just not a thing in Europe. Bank drafts, transfer orders are, it's all electronic. Other things they do over there too that are in some ways smarter are chip and pin. Typically, if you use a credit card, there's typically a pin you have to insert on it. Here in the States, we're just used to, putting a signature or doing whatever. And the credit card companies are admitting that there's going to be some amount of fraud, but it's within their limits, and they'll just suck up every once in a while when they get ripped off. But if you take, for example, I take Square Transactions, the Square reader, and on that, if I've got the better reader, the one that does the chips. If I use just the swipe one, and there's some fraud, I'm actually responsible for the fraud. If I use their chip variant, then they have to suck up the fraud. But anyway, um, getting back to checking services, most of us will have a checking account, and that's an account where there's going to be a lot of transactions done. So a lot of writing of checks, probably not anymore. Probably a lot of electronic debits. Um, anyway, paying bills on time, obviously. Yeah, if you start missing deadlines, it's going to eventually trash your credit rating, but in the short run, it's also going to be much more expensive. If you're late on something, automatically call the people. And just about any credit card company out there will have a provision where if you haven't had any late payments in the past year, I don't. I generally call them. I guess you could do this online, but I find more response when you're actually talking to a person. But anyway, they'll generally waive the fee. It's usually a $25 fee or something. The reason I always get into the situation is because there's just so much fraud on credit cards, and so I don't know. Roughly every 6 months, I get a notification or something, or I see on a bill that there's bogus charges on there. I call, they issue me a new credit card, and I have literally everything I can taken from my credit card, debited from my credit card, just to keep track of expenses and also to maximize the perks. And because of that, sometimes some of these cards with the transition phase, they, the automatic payments get delayed by a month or something. Something slips through the cracks. And but anyway, just don't do it often. But if you do it, say less than once a year, you can generally save yourself the money, and they'll just say, "Hey, yeah, I didn't mean to do that. Can you waive it?" And they'll just take a break, and they'll look at the thing and they'll go, "Oh yeah, yeah, we see you're a good customer," and moving on. So debit cards. So this whole notion of this goes way back, but when people, it's kind of a lost art balancing a checkbook. With debit cards, it makes it exceedingly difficult because a debit card is just like writing a check, yet most people aren't in the habit of writing that down in a check register. Additionally, debit cards and checks are now almost instantaneously taken from your account, which didn't used to be the thing. There used to be a float, and that's going away. So there's a lot of things. Even getting back to the stock market, there's like a 2 or 3 day settling time on stock transactions, which is expect that to go away in the next couple of years because that's a scam as well. With electronic transfers and Bitcoin and the rest of it, things are instantaneous. These people are just using your money for a while with no interest. So we'll see some shakeups coming, and part of it, you know, some of these exchanges, Robinhood and the other ones, are some of the practices they've employed are not quite fair. Um, so yeah, most of these things are the norm. These guys are kind of behind the times. Yep. Now I still do keep checks around because a lot of times some of the old school people, businesses, if you're going to use a credit card, they may want to charge you a convenience fee, and I, that I don't do that for the most part because there's the miles or whatever perk you're going to get from using a credit card are not going to equal that extra charge. So typically it's 3%. So if I'm buying, let's say, it always comes up where I'm buying hay or something, feed for the animals, and I'll typically write a check for that. So checks are nice to have around, and I love taking checks if I'm selling something. But again, there's some gamesmanship involved. A lot of stuff that people might be purchasing from me, or they might be purchasing like a quantity of, let's say, horse fencing or something like that, And they'll ask if I'll take credit cards, and I certainly will to affect the sale. And if they've already got everything that they're going to get, and they say, "Oh, do you prefer cash or credit card or check?" I usually opt for the check. I definitely don't. The cash is fine. It's just a little cumbersome, but I'm selling big items that and pretty much to non-flaky people. I've never had anybody bounce a check on me. But the credit card, I'm if I'm selling $3,000 worth of stuff to somebody, that's $90 gone. My margins are not that significant. So, if they're willing to write a check, I'm very happy to take it. Now, if there's somebody who's looking at something and they're, hemming and hawing in terms of how much they need, um, you know, I definitely don't want to discourage them from using a credit card because people are more or less undisciplined and they'll say, "Oh, it's going on the card." Put an extra $1,000 worth of more equipment on there, so sometimes the sales go up. So I don't think it's deceitful on my part, but it's certainly you know if whatever, people are people. There's a lot of psychology involved. Okay, so balancing the checkbook. Let's hope we're doing that. Check float, so not so much. You know, you'll see checks being electronically scanned. I mean, believe it or not, I grew up flying, and a lot of guys were building flight time by flying checks around because it was worth it to the banks, to give a box of checks to a guy in a little Cessna and fly it to the central check processing thing. There'd be a lot of checks, but anyway, anymore it's all electronic. Credit card financing. So, yeah, debit card, we talked about that. Debit cards for teenagers, prepaid cards, all those things. A lot of people may, it's been a while for me, but, you know, people have talked about using the prepaid like Visa cards to establish credit. Um, anyway, I would want to see that from the credit bureau before I go wasting a bunch of time and effort to use those cards. But building a credit score is tough. But getting something like a cell phone contract and always paying it on time or something like that, something that's essentially a necessity that you're going to have regardless. If you can get that in your name and get your credit established, and then get a regular credit card as soon as possible. But maybe a prepaid credit card might be a step in that journey. Safe deposit boxes. There aren't really that many boxes available. Most people now don't have their own safe deposit box. It's just, you know, whatever. You look at a town the size of Anchorage, I can guarantee you there are not, 300,000 safe deposit boxes out there. There's a handful. Most people though do have, maybe a personal safe, a gun safe. The big issue is that you have something that's fireproof and not easily stolen. So that's why sometimes the bigger safes are better. We're used to ATMs. So again, this is one of the things that can be very competitive, and this can be one of those things that's very insidious. If you're sucking it up, paying a couple bucks each time you use an ATM, or well, three or four or whatever, or driving across town to use your own ATM and burning up your gas and your time, maybe you need to rethink that. Cashier's check. This is why I got a little frustrated with one of the banks in town here. I took a cashier's check for a large piece of equipment, and the deal with a check, when you write a check, um, I'm just talking a regular check, not a cashier's check. Um, you present it to the bank, and then they withdraw the money out of that person's account. So there's that time between when you're given the check and you go to cash it that you're hoping that that person doesn't run on that account. Um, a cashier's check is a little different. Say in this case, whatever piece of equipment, $21,000 worth of stuff. That guy goes to the bank, gets your cashier's check, and they set aside that $21,000 and they basically log that cashier's check against that account. So me as the seller, when I take that cashier's check, now I've got a much higher confidence that that check is going to be good. Now, where one of the silly banks here in town, they said, well, we're going to put a hold on that check, until it clears for a certain number of days. And that's BS. They know that check is going to clear. What they're doing is they're restricting my access to that money for whatever number of days so that they can have, that money in their account. And it's just not legitimate, but they can do it because there's a small market. And anyway, there was another bank here in town that I also had a branch account with. I took the check to them, and the money's available right then. Now, I necessarily didn't need the money right then, but what's the point of having a cashier's check, guaranteed payment, if they're pretending that it's not guaranteed payment? Okay, money order. Yeah, in your life, the only time you should really encounter a money order is maybe when you need a passport, something like that, or if you're unbanked. But if you're unbanked, you're probably not taking this personal finance class because you probably, you know, don't have even the resources to do much in life. It's tough. It's tough. I mean, there's a lot of people who might have to rely on money orders, but the way a money order works is you say you want $100 money order, you go to wherever post office, a Walmart, or whoever offers the money orders, and you give them the $100 plus a few bucks for their fee, and they write you this money order, and then you present that money order to whoever was requiring it from you, and that person can use that money order like a check, and it does have a guarantee behind it. There are going to be funds behind it, but again, it's not something that if you've got yourself squared away, are dealing with on a regular basis, unless it's the U.S. State Department, which is kind of obsolete. So I'm sure they like faxes as well and other technologies that aren't really that relevant anymore. So travelers checks. Again, I can't offer you that much financial advice. I'm just telling you kind of what I've done and what I think, especially in stocks and stuff. But I would almost make the exception with travelers checks. These things are almost a joke at this point. I was way off in the middle of nowhere. I was in place in Bulgaria, I think, and I'm using my credit card. A U.S. Visa or Mastercard, whatever I had at the time, not a problem. And these people, Americans, they had these travelers checks, and the woman there at the hotel counter, I mean, she clearly, this might have been the first one she ever saw. And anyway, it was they're just not used that often anymore. And so you may run into people where this traveler's check used to be something to take off to a foreign country and be able to use, you know, without any risk of not being accepted. Now, same thing. You'll also find too, and it's not the same thing, but even like American Express cards, when you really need to use a credit card and all you have is an American Express card, some places don't take them because the fees are higher. So I've been in that bind too, where I've for business travel, they insist that I use an American Express card, and you'll pull up to a gas station, and maybe the only gas station around, and because they charge, I think four something percent, um, and the regular credit cards are 3%. Some vendors just some retail operations won't take them. Plus, they're not really a true credit card. A lot of times they have different products, but most American Express cards you have to pay them off in full at the end of the month, which is good, I guess, from a discipline thing. But anyway, we'll get more into that. Selecting financial institutions. So I was talking a little bit about this before. There's lots of reasons to choose a particular bank, and it's not all about money. Convenience, time and gas are worth something. And ATMs, online banking, and maybe a situation if there's no fees involved, maybe a situation, where you have a couple banks. Paying bills online, again, that's kind of the norm, especially even direct deposit. A lot of employers, you must have direct deposit, and paying bills online is just so much easier. Deposit rates and insurance. So, do I care at all about that? Not a bit. I don't get any interest off of my checking account. I mean, I don't specifically look for checking accounts that don't pay interest, but because I'm not keeping much money in there and they give just such a pathetically low rate that it's not an issue. Um, but the fees are something to look out for. You know, I had one bank in town that I used business fees for, and I think it was $8 a month. I mean, the competition's five. Why are we? Again, it's $3, but you have multiple banks. Then also, I wanted to be able to deposit checks, um, via an iPhone, via a smartphone, and they wanted $35 per month for that. It was just some of the fees can just be very widely, so you really need to research that. Um, Interest rates. We'll talk more about that. Certificates of deposit. So sometimes because these rates are so low, they'll have other products, and we'll talk more about this in another subject, but another time. But sometimes they'll say if you'll put down a certain amount of money and you'll leave us with for a certain amount of time, we'll give you a better rate. So it goes from being completely pathetic to just mildly pathetic. And what I mean is compared to the rate of inflation, you're still losing money. You're not treading water. You're not making money on the interest. You're just losing less. So it's again, you need to be disciplined. You need to not let too much money accumulate in non-investment accounts. And risk-free rate of return guaranteed for a specific time. So anyway, sometimes these things will have a rate that's tied to that time limit. So like a CD, certificate of deposit, a CD may have like a 5-year time limit that you have to keep the money in there. If you pull it out early, you may lose your interest or you may pay a penalty. So again, not something I want to do. Risk premium, additional behind the risk-free rate. So it's assumed that the government rate is involves no risk, and if you get a little bit above that, that's a risk premium. Loan rates, that's how banks make money, right? They take your money in, they give you a 0.5% for it, and they loan it back out for 5, 6, 12, whatever percent. And if you want to get the best rate, um, you need to have a good credit rating because they're going to use that as an explanation why you get charged a higher rate than the other folks. Impact of the economy. Yep. Anyway, you got to control what you can. When you're in the economy, we're not we're not driving it here, so I'm not going to spend a whole lot of time. Oh, anyway, you need to live within your means. You need to not speculate. You need to invest, or well, obviously I just showed you where I'm speculating a bit, but that's with excess money. You need to establish your savings goals, meet those goals, and then if there's excess money before, then maybe you can invest in something else. But yeah, things like Bitcoin and the rest of that are just right out. Um, Choice of your risk tolerance. Yep. It all depends on your situation, but they will, advise you to take less risk. And then certainly if it's something, I had a big purchase. I was doing a real estate purchase and I left the money in the market probably a little longer than I should have. The market took a dip and it was painful to pull it out. I knew it was just a blip and it was going to be bouncing back up in a month and coulda, woulda, shoulda. But anyway, that will happen. Term structure. So the U.S. Treasury, which would be based, they would consider that risk-free. Your chance of the U.S. government defaulting on a security is quite low. So they just say it's negligible. But since you're not taking any risk, they're not paying you much in the way of a return. Shifts in the yield curve. Yeah. Obviously, you're not going to newspapers. You're probably going to look online and you can see what things are doing. Um, Loan rates right now are exceedingly low, artificially low, but there's a lot of things going on right now. I would imagine that inflation is going to kick up, and I think we see that. I think a lot of us see that things tend to be getting more expensive, yet we're being told there's little to no inflation. So the monetary policy. So you get people in the Fed who set the monetary policy. They set the interest rates. So, they look at the money supply and then the open market. The Fed, this is the Federal Reserve, um, and the Treasury people. But again, it gets very political very quick. In fact, let me jump out of this real quick to show you something. Um, Getting back into some of the stock things. Yeah, sure I did. When you have the Secretary of the Treasury taking $7.2 million in speaking fees, oh boy, you know, it's hard to keep people objective when we've got those things going on. So that kind of weighs back into the whole situation where they suspended trading on some of those items and whether pressure was applied. I'm not offering an opinion on whether that happened or not, but it certainly creates doubts when you have situations like we currently have. Anyway, so the monetary policy, a lot of those people involved in the big banks, the Treasury, the Federal Reserve, which is a pseudo public private type of organization, there's just a lot of things going on. And this is one of the reasons why, when I say Bitcoin is speculation, but Bitcoin, the price speculation, but Bitcoin kind of being potentially the way of the future, something that's separate from the government, um, might be something that might be more popular because there can be less influence. Anyway, not of course on Bitcoin, but it is an interesting facet of what's going on right now. Why interest rates change. So the Federal Reserve, increases the funds, so more money, more printing, and they try and manipulate interest rates. Interest rates, up or down. So they raise interest rates when they want to slow things down and decrease interest rates where they want to speed things up. And they think they can control. And the reason why I say they think is because sometimes they get the interest rates down to zero and things are, still overheated in their mind. Or sometimes interest rates go too high. And anyway, a lot of times they can't quite control it. So government demand for funds, just because they're dealing with so much money, and then the business demands for funds. How banking services fit within your financial plan. So again, this gets back to the homework assignment. What services are most important for you and what do you need? Do you do the reason I stuck with the bank in Texas is because I was doing, wire transfers to Europe for quite a while when I was still purchasing the house over there. And, here in town, I think it was 75 or 100 for that transfer, whereas the other bank was $50. So it was a no-brainer, or 25 even. Anyway, so you'll feed these, but if you're not doing those types of transactions, that's why it's a very individual situation to you. Um, Interest rates, like I say, I don't care. Mortgages, I don't typically do it with the same organization. There's two big mortgage actual providers out there, or at least seem to operate here, Wells Fargo and Freedom. Um, but you meet with somebody locally or wherever, and then your loan gets sold off, and about you say, oh, I've got a mortgage with Home State or Residential or whoever. That's just to kind of process your paperwork, and then once it was processed, it was sold off to one of those companies, and you'll generally end up paying the money to Freedom or Wells Fargo. So that's not really a choice you get to make. Um, Personal loans, you're going to do that. Checking services, location. So all these things are valid, but this interest rate offered, I don't care because it's just too low and I don't have enough money in there. If I was worried about the interest rate, then clearly I'm not doing a good job. I've got too much money in that account. Because look at this, zero point 0.5, zero point 0.5. This is summary of the best. You're having to go online and they're calling this high yield savings account. Really? Half a percent average or annual percentage yield, right? Zero point 0.4, 0.55 with a minimum balance. Um, anyway, so it's just not enough to drive my decision. Especially, here's the inflation. So when we talk about inflation generally, 3% is really historically had been sort of the norm. Hence why they have the 3.5 out here. Lately, it's been quite low. Here they're saying, okay, they're estimating 2.24, zero point 0.6. These interest rates had been low. But anyway, if you're getting paid zero point 0.5, yeah, last year you would have lost whatever, 0.012 or 0.12, whatever, a tenth of a percent of interest, and on a normal year, this year, if you're getting paid half a percent, you're losing whatever. Don't make me do more math. 1.75 um, in interest. The buying power of your money is decreasing. You deposit $100 in that account, you keep it in there. It's going to compound daily, and it's going to do its whole thing. But it's just going to be worth fractionally more than $100 at the end of the year, and the buying power of it is going to be reduced by 2.225%. So that's the problem. When you're making 10% in the stock market, in actuality, you're making about 7.5. And oh, by the way, part of that's even taxed. Anything that's above that's a profit is taxed. You don't get to write off the inflation costs. So it's you need to make some money. How can you do that? Again, I'm always talking about the stock market, but that curve is something that can generate money. And again, that's about works out to about 10% per year. So 10% per year when inflation's about two and a quarter, two and a half. I mean, that's not bad. But there's risk in here. These are companies. The Dow is just an index. The Dow is just made up of some larger companies within the U.S. Do I invest in the Dow directly? No, but it is sort of representative. Stocks I invest in are things like this. This is more than 10%. This was whatever, $105 back when I bought it. Now it's 1,000 something. I mean, do I have this good of luck all the time, or would you expect to have any of this kind of luck? No. But Shopify's tied to. They're not part of Amazon, but they work with them. So when Amazon does well, Shopify does well. They're bigger than that, or not bigger than Amazon, but they have more customers than Amazon. But anyway, once in a while you hit on them. But there's some fluctuations, down 2%, on Friday. So that's just a little overview on checking and some interest things. We'll look at some more managing your money kind of thing. Money management, liquidity. We've hit liquidity a number of times. The ability to get cash in a timely manner. And money management was we've already discussed this. When I was saying to keep some amount of money, maybe not even your emergency fund. The stuff that I've got in a brokerage, or if you had it in a brokerage, you can get it within a day. You could actually, I've done this before where you can pay directly onto your credit card right from your brokerage account if you wanted to. So it's not that the money's inaccessible, but there's this sort of physical, psychological divide. So, I would not feel bad having your emergency fund not in the checking account rather than a brokerage account. So then a checking account just means keeping enough in there for liquidity for your, day-to-day businesses. And it's, sort of a bucket method where you dump some money in at the first part of the month and, you see how much is there and you get it back up to the level that it needs to be. And, just a lot of fluctuation in that account, but that's good because you keep all that volatility confined to one area where you can keep track of it. Using credit cards, interest rate usually very high. Well, if I'm not paying the interest rate, again, what do I care? If you pay it off every month, you're good. If you've got enough money in your emergency fund to squelch that card, then you're not paying interest. So now you're looking for perks, and go figure. The credit cards with the best perks usually have the highest interest rate. So I'm not shopping credit cards by interest rates because I'm not intending to carry a balance. Now I'm not looking for the card with the highest rate, but if I get to a situation where I screwed things up and I have to have to carry a balance on my credit card, I'm going to do a balance transfer to something else. Anyway, adequate return, highest possible return on short-term investments. So there are money market accounts that you would have with say a brokerage that would pay quite a bit more than that 0.5 interest rate. Let's see. So checking account, we beat this one to death. Very liquid, lots of transactions. Overdraft protection, very important to have. So that might be why you have a credit card associated with it. It may not be the credit card you use all the time. Maybe just a credit card you put in the drawer, but you need it just to keep that overdraft. You cannot afford to bounce checks. It's just too expensive. So, it's going to happen now and again where you, whatever, have some sort of overdraft situation, and you need to, obviously address it, but you need to obviously have an overdraft so that you don't get hit with those fees. Stop payment, kind of a thing of the past. I've used this once or twice. Well, just once actually. I lost somebody's check, and what happens here is, the bank will, when that check comes to be cashed, um, the bank will not honor it because it's got a stop payment issued against it. So it's not something you use very frequently. In the case of a lost check, well, go ahead and put a stop payment on it because that check is not going to make it to the bank. I'm just going to have that person write me a new check, and I'll, give them $5 or $10, whatever the bank may charge for the stop payment, and then, we move on. And that person writing me the second check doesn't have to worry about me, you know, lying about it and coming up with that first check and cashing it. Direct deposit, I'm sure we're all familiar with that. Fees, no interest on most checking accounts, typically. Or if it is, it's so pitiful, it's not worth worrying about. Now we're starting to get into some marketing terms, negotiable or whatever. The now account, it doesn't really mean much. Um, Sometimes minimum balance, lower in liquidity. Sometimes it'll limit the number of checks. I don't do any of that. Savings deposits, I don't bother with those either. My savings are in a brokerage in a different place, different entity. CDs, certificates of deposits, they have restrictions with them typically. Money market demand, I mean, again, they're just, a lot of times there's not a whole lot of difference between, say, this and a now account. It's just one company. Oh, here we go, where they actually say now account. Treasury securities. So I don't do this unless it's maybe for some government security account that's like a parking place within the brokerage firm where you're fixing to buy some stock or some sort of equity, and you're perhaps trying to time the market a little bit, and you keep the money in there, and but it's since it's backed by the U.S. Treasury, you're experiencing very little risk, so your return is going to be negligible. And T-bills the same way, so which means a Treasury bill. Money market funds. Again, not much different. All these accounts are just sort of parking places for money that's more or less waiting to be invested. These accounts are all going to be subject to inflation. And like I said, I think inflation is going to be a higher number, in the future. And if you have money in cash, it's it's not, it's being the inflation is working against it. Whereas if you have it in some sort of equity, you have it in stock that's part of a business, hopefully that business is experiencing the inflation. So that stock price is going to be going up. It's floating with that inflation rate. And same thing with real estate. If you have the money in property, if the inflation rate is, say jumps up to 5%, well, hopefully the property inflation is going up by 5% as well. So you're protected. If you're holding in cash, it's the buying power is being eroded. So here's how they're showing it. Uh, Whatever. They're back in the day, 3.28. We're not even getting those rates now. So um, this this shows again from their example that they're working off historical data when interest rates were higher and probably more normalized. Asset management account. Again, we're not going to ask you to split these things out. There's not going to be anything on a test. Again, it depends what brokerage you're dealing with, what bank you're dealing with in terms of what they title their their account at. All you're really concerned with is the interest rate that you're getting. So they're showing a checking account with no interest. Sometimes there are checking accounts with some interest, but very, very low. And these now accounts, saving accounts, CDs, treasury bills. Some of these differ in the fact that the liquidity goes down where um, you have to have a certain amount of money to even buy the CD. It may be a $5,000 you know investment, and you need to keep it in there for a certain number of years. So high minimum balance required, that's all relative. Typically, if you've got a brokerage account, they waive these minimums because the amount will change. You buy a bunch of stock, you clear out that account, and then, a year later, you sell that stock and that money flows back into that account. It's just sort of a place where for the proceeds of stock sales to go when they're not being invested. Here they've got them spread out and they're trying to make difference. They're really fighting to make sure that, but not that big a deal. And here they're not even showing like the 5-year CDs or the jumbo CDs. But I don't want to it wouldn't be prudent for somebody to tie up their money that long at a low interest rate. So credit risk, yeah, that they may not repay, that the borrower may not repay. Interest rate risk um, could decline as change rate. So, and liquidity risk, you might not be able to get at it. CNN, not so much. There's better products out there. You've got so many new products out there. You've got um, even Yahoo Finance has actually kept up in some of the charting. Some of their charts are quite good. And But now you've got all these specialty things, and you've got brokerages like, Robinhood's in the news right now. I'm not a fan of Robinhood. I don't have an account with them. A lot of people like their interface, but again, one of their come-ons is that they do free trades, and I can see, having money with Fidelity or Ameritrade or whoever else, and they offer free trades, but they're making their money someplace else. With Robinhood, when you don't have much money with them and they're still offering free trades, well, how's their business model work? How are they making their money? And sometimes when you're getting something for nothing, it's because you're the thing that's being sold, not the product. So they're making money, but it's anyway. You'd have to do your own research. Impact of liquidity. Yep, lots of things could happen. greater potential for layoff, income may be reduced, and so. And this is where it is right now. I mean, the the Robin Hood politics, everything right now. It's not a left versus right situation. It's a whatever elites versus working class, the haves and the have-nots, especially under COVID. Some people are making bank under COVID, and other people are getting clobbered. So anyway, you can judge your news source by the way they're presenting this thing. If they talk about people losing billions in the market this week because of the situation with GameStop, they're completely ignoring that the people that are making billions. So anyway, it has to do with who they perceive their audience as. So risk management, yep, nothing wrong with risk, but just make sure it's in proportion. If you're taking crazy amounts of risk and not being compensated for it by making a very high rate, and it's again it gets into marketing again. If I'm trying to sell you something, I'll call it a high yield bond. If I'm describing it in another thing, same product, it's referred to as a junk bond. You can tell that this is what happened in 2007, 2008. They got all these garbage mortgages, they piled them together, and they acted as if they were a better product because it was a pile of bad debt. And people lost track of the assets. They pretended that they were all, single family home mortgages out there with people working hard to stay in their homes when a lot of it was just multiple mortgages by ninjas, no income, no job, no assets, people who they were just, you know, had balloon notes on 5 different properties. So anyway, you got to be able to peer under that and see what the underlying assets are and make sure that the risk and the rewards are proportional. Optimal amount of money in money market investments. So the attempt here should be to minimize the amount of money you have in there. You want some liquidity, but again, you need to sweep off the excess amounts and put it in an investment where it's working for you. I disagree with this. Again, looking long term, we'll talk more about investments, but you have to make your own decisions. But stocks have, again, 10% per year is not unexpected. So as interest rates creep back up and as inflation creeps back up, it's important that and especially if you're young, if you have time, then there's even less reason not to be invested either in real estate, stocks, or investments rather than keeping it in cash or keeping it in a low interest account. Not a whole lot to grab out of here. Anyway, a checking account is a tool. It's a tool to get you functioning through the month. Nothing more, nothing less. It's not a savings vehicle. You need to be disciplined and get the money out of that account and moved on to legitimate investments. And that investment may even be keep it in cash to put down on that down payment if it's going to be done fairly quickly. But if it's not going to be done fairly quickly, then go ahead and move on. I mean, not all years are going to be that good, but there's a lot of people who made like 65% last year. That's just incredible. And there's going to be other years where you're going to lose a little bit of money. So you got to be there throughout the course. Fidelity, big company. These guys kind of get some kudos. That's where I bought the, what do you call it? The AMC stock this week. They were actually allowing trades, whereas TD Ameritrade had it restricted. Robinhood had it suspended for a while. But anyway, company like this, mutual funds, stocks, options, I mean, some fairly sophisticated stuff. 529s for college savings. But Fidelity's not that unique. I mean, there's a lot of big companies. There's probably 20 companies that are equivalent to Fidelity that could do this for you. Vanguard, big huge company. Um, you know, again, the way their websites are set up. I've got an account with. Sometimes you're driven to it by the company you work for. One of the companies I work for has a situation with Voya. Absolutely horrible website. I will, the day I quit that job will be the day I transfer my money to somebody else, but it's just because the presentation of their site, it's just horrific. But anyway, there's, you've got so many options out there, and there's not a huge amount of value to having, multiple accounts and across multiple people. But you go to TD Ameritrade, although they, like I say, they restricted trading this week. And then sometimes you find out they're the same people. Schwab bought Scottrade, bought whatever. It's like banking where you have to keep track. You have to reassess once in a while because the names change. Term project. I just put you could read through this. This is out of the um, syllabus. But again, these are some of the decisions you're going to be working on. Okay, so for the homework, you're going to look at three real world, checking accounts. So none of this is going to be in the book. You will not find this question in the book. This is just something you're going to do on your own. So figure out three. They can be online, they can be your normal bank, a couple banks here, a credit union, whatever. Um, and just you know write up a page or so about what is a comparison, even a chart, however you want to lay it out. But figure out what the fees are, uh, what their policies are. I again, the bank in Texas, every time I use a debit card, not that I use it very often, but they give me 15 cents. It's just, if when I used to use a debit card a lot, it would be, $5, $6 worth of just credit coming back to me. Overdraft avoidance procedures, convenience, location, anyway, and the criteria you used for that.